Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Boyd Gaming Corporation Annual Report. Boyd Gaming Corporation offers a diverse range of businesses and services across the United States and Canada. At the core of their operations are casinos, which they own and operate through various segments. In addition to traditional brick-and-mortar establishments, the company also provides online casino gaming experiences through its Boyd Interactive business. Beyond gaming, Boyd Gaming Corporation has expanded into related services, including a travel agency. This move allows customers to plan and book their trips in conjunction with their gaming activities, creating a seamless experience for patrons. By diversifying its offerings, Boyd Gaming Corporation has established itself as a comprehensive entertainment and hospitality provider. Boyd Gaming Corp's stock price has seen an increase of 13.75% in the past year, driven by strong quarterly earnings reports and strategic financial moves. The company's first quarter 2025 earnings report exceeded expectations, leading to a 3.42% rise in the stock price. This trend continued with robust second quarter results, where Boyd Gaming reported exceeding analyst estimates for both EPS and revenue. The sale of its 5% equity interest in FanDuel for $1.755 billion was another significant factor, contributing to the company's financial strength. Although the initial reaction to the news was a slight dip in regular trading, analysts viewed the move as positive for the long term. The third quarter earnings report also beat analyst estimates, with the stock price increasing by 2.4% in after-hours trading. The fourth quarter earnings and full-year performance reports further solidified Boyd Gaming's financial position, with record revenues and net income achieved. Additionally, the company's board of directors approved an 11.1% increase in its quarterly dividend, enhancing shareholder returns and confidence. These consistent earnings beats and strategic financial moves have been key factors driving the positive stock performance for Boyd Gaming Corp over the past year. Boyd Gaming Corporation maintains a market capitalization of $7 billion, broadly in line with the industry peer group. Boyd Gaming Corporation trades at a lower price-to-earnings ratio of 4 times and a higher price-to-book ratio of 2.54 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 75% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has aggressively reduced its share count by more than 5%, while revenue, profits, and assets have grown. This represents a very favorable capital allocation strategy, with management materially increasing per-share value. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified from the extracted summaries. On the growth side, gaming at entertainment properties is a significant contributor, accounting for 64% of revenue. Online reimbursements revenues also play a crucial role, increasing by $125.7 million in 2025. Additionally, management fees and Boyd Interactive's operations revenue have seen increases. On the decline side, online revenue has decreased by $23.6 million due to lower market access agreements, revenue, and one-time fees not repeated in 2025. Impairment charges also contribute to the decline, totaling $128.4 million in 2025. Room revenues have decreased by 6.5% due to declines in average daily rate and hotel occupancy rate. In summary, gaming at entertainment properties and online reimbursements revenues are key drivers of revenue growth, while impairment charges, lower market access agreements revenue, and decreases in room revenues contribute to the decline. The net income of the company experienced fluctuations between 2025 and previous years. Initially, it increased from $578 million, but later decreased by $32.3 million in Cone 2025 due to a long-lived asset impairment charge. However, for the year ended December 31, 2025, there was no change in net income. Profit margins also underwent changes during this period. They were implied to have decreased due to a decrease in operating income and an increase in income tax provision. Specifically, the Las Vegas Locals segment saw a $7.9 million or 1.8% decrease in profit margin compared to the prior year. The Midwest and South segment experienced a decline in profit margins due to estimated fair values of trademarks and gaming license rights not significantly exceeding their carrying values. The reasons behind these changes are multifaceted. Intense competition in the gaming industry poses a significant threat, potentially leading to loss of market share and revenue. Additionally, increased capital expenditures required to maintain competitive positions further strain profitability. Segment-specific factors also contributed to the decline in profit margins, including a room revenue decline and revenue mix changes in Las Vegas Locals segment, as well as gaming revenue decline and increased cost per guest served in downtown Las Vegas segment. The company's financial performance indicates a consistent trend of generating positive operating cash flow. According to the operating cash flow summary, in both 2024 and 2025, the company has reported significant positive cash flows. In 2024, the company generated $957.1 million in operating cash flow, while in 2025, this figure increased to $976.7 million. This upward trend suggests that the company's operations are generating sufficient cash to cover its expenses and investments, indicating a strong financial position. The company's debt level and interest expenses have undergone significant changes over the past year. One notable change is a decrease in interest expense, which dropped by 13.1% from 2024 to 2025, resulting in a savings of $23 million. Additionally, the blended interest rate for outstanding borrowings under the credit facility decreased from 6.2% in 2024 to 5.3% in 2025, a reduction of 1.9%. Furthermore, current maturities of indebtedness have also seen a significant decrease. However, long-term obligations remain relatively stable, with only a minor change in net discount value. Overall, these changes suggest that the company has made efforts to manage its debt and reduce interest expenses. The performance of various regions and segments in the industry has been a topic of concern. Regions that performed poorly include Illinois, Indiana, Iowa, Kansas, Louisiana, Missouri, Ohio, and Pennsylvania, indicating a decline in their market share or revenue. The Hawaiian market also struggled, while riverboat gaming operations experienced poor results. California, Fremont, and Main Street Station are regions with uncertain performance, suggesting that their results were mixed or difficult to determine. These areas may have shown some promise, but ultimately failed to meet expectations. Management is emphasizing a short-term focus on retaining customers and increasing revenue through its loyalty program, Boyd Rewards, and digital transformation initiatives. In the long term, the company aims to grow revenues and build loyalty among core customers through targeted marketing investments. To achieve this strategy, management will prioritize efficient operations, maintain balance sheet strength, and diversify cash flow. The company also plans to return capital to shareholders through share repurchases and dividends while investing in existing operations for growth. However, management acknowledges several challenges and risks, including increased competition from new gaming operations and changing regulatory environments. To mitigate these risks, the company will focus on adapting to industry changes and identifying opportunities for growth and expansion. Overall, management's strategy is centered around driving revenue growth, building customer loyalty, and maintaining a strong financial position in uncertain economic conditions. The company's financial activities have been marked by a commitment to returning value to its shareholders. One key aspect of this is the payment of dividends, which has been consistently reported across various pages of the extracted summaries. On page 22, it is noted that the company has indeed paid dividends, and this trend continues on page 31 with a specific mention of $62.7 million in 2024. Furthermore, on page 89, it is stated that a cash dividend was declared by the Board of Directors on February 19, 2026. In addition to paying dividends, the company has also engaged in share buybacks, which is another way to return value to its shareholders. Similar to the payment of dividends, the extracted summaries indicate that the company has bought back shares, with page 22 confirming this activity. On page 31, it is reported that the company spent a significant amount on share buybacks, totaling $778.3 million in 2025. These actions demonstrate the company's efforts to reward its shareholders and create value for them. Concerns have been raised regarding supply chain disruption in the industry. One potential cause for this disruption is the actions of landowners who lease their property to companies. If these landowners were to disrupt the use of leased property, it could lead to a significant interruption in the supply chain. Furthermore, there are also concerns about inventory buildup within the company's operations. The majority of its inventories consist of food and beverage items as well as retail products. This accumulation of stock can be problematic for several reasons, including storage costs, potential spoilage or obsolescence, and reduced cash flow due to tied-up capital. That concludes the financial summary for Boyd Gaming Corporation. Feel free to comment below, and I will be happy to answer them when possible.